What's going on, everyone? In this video, I'm going to show you how I made $1,600 in 2 accounts in under 6 minutes. My trading only takes 1 hour a day, and I'm trading liquidity runs during the 9:30 to 10:30 window, just as I taught in my One Setup for Life video. This morning, we saw an SMT at the highs between NASDAQ and S&P, strong displacement lower at 9:30, waited for a retracement to a premium where we then saw another SMT, order block, shorted that into the equal lows sell side, easy money. You're about to see the full execution from beginning to end, the trade management, as well as a market review at the end so that you can know exactly why I entered where I did, why I trusted the setup, and why I also took profit where I did. Enjoy. All right, 15-minute chart. We've been consolidating in London, so likely going to have a busy New York session here. Sell side is here, buy side's here, and we remain in a bit of a range with the coupled markets. And if you look, right, S&P is already making higher highs. It's already blown out its previous all-time high. And the NASDAQ's well below it. So we're seeing a huge SMT divergence here going into the open. So that's something I'm watching because I want to see how the markets get in sync and if the NASDAQ catches up or if the S&P starts to sell off. Those are the two things I'm going to be watching for going into the open here. So that SMT with the NASDAQ and S&P is very significant because pull them both up here, side by side. Right. When you have a asset like S&P making an all-time high, we should see NASDAQ close to that. What is this on the higher time frame? That's a S&P divergence on a daily and weekly chart. So that could be signaling something. So we'll watch that. Also looking at regular trading hours, right? We don't just use RTH for the gap there. It's also for looking at the liquidity. So if we keep selling off, we have these equal lows here from yesterday's PM afternoon session. All right, so we're trading up into a bearish breaker and midnight opening. So watching this down close candle here, extend that through. That's a bearish breaker on the 5-minute chart. We just traded up into that on the 1 minute so far, seeing a pretty strong rejection there so far. I want to see, can we remain below that 5-minute breaker and then make a run for that sell side that I have labeled there. That also brings us back to a premium market here. So displacement, retracement, back up to a premium, and the breaker block. S&P selling off. I'm going to go and pull the trigger on a short here. Stop's just going to go above the high here. Tight stop, 20 points, and then we'll aim for that daily gap here. This up close candle here, I want to see if this can act as a bearish order block that we're trading up into here. Oh, my other account, I got a bit of a better fill inside this down close here, inside that breaker. That's all right. And I need to see NASDAQ really drop now. S&P already took out this low here. So I don't like to see how right now we're seeing a divergence. I want to see NASDAQ really start to work lower. I want to see a strong closure through constant encroachment of 50% here. I want to see it really start to make ground through that. All right, make sure you guys pay the trader below that low. I just have one contract on, so I got to do what I got to do. Make sure you guys are getting the trader paid there. On my other account here, I'm locking something in. Trader paid there at the high of the daily fair value gap, holding a runner on this account down to that sell side we're looking for. All right, that's good enough. I don't want to sit through another retracement. I'm just going to take the 900 there inside that daily fair value gap, that blue box. I just keep a couple levels on here for you guys. I don't want to make it confusing, so I just put a few things on there. That's why you got to keep track, follow me through the time frames. This is that daily fair value gap. So, of course, that's going to be a good discount rate to take partials at there. So I'm just closing everything out there on both accounts. So short review here. We had a buy side run here. Right, so buy side taken. Displacement to the downside, right? Shifting market structure. On the 5-minute chart, we have a bearish breaker block here, right? And then market trade up into the breaker, but also what a premium of the dealing range, right? So we have this low down to this high. This is a premium market, right? The market makers, as a review for you guys, don't like to keep the market at a premium for very long when the markets are bearish or heavy, right? So that's why it trades up into a premium and quickly trades lower. And then they traded back up into the bearish breaker block once more time, broke down. As soon as we cross this opening price here, that's your changing in the state of delivery. That's why it's a bearish order block. That's why when I'm short here and it's trading up into it, It's all right. We're not panicking because it's a bearish order block. Why is that? Because the market is going from a retracement to a new leg of expansion. That transition in price delivery is a change of the state of delivery. So it's going to go from a retracement to an expansion. That order block is the bookmark that the algorithm sees as, okay, this is where I'm changing my state of delivery. So as soon as it crosses that opening price there, the market initiates a new sell program. What's a sell program? The market's going to seek a discount, liquidity, and an efficiency. The liquidity is right here, and the inefficiency is here on that daily chart. That's what a sell program means. And then these are the basic mechanics to get into it. Premium discount, we had a buy side run first. Displacement, so all the things that we would look for in terms of institutional sponsorship. Trades up into the midnight opening, offers smart money that premium pricing, and then they sell it off.